Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So in today's lesson, what I want to do is give you a quick example of a lesson that's out of my new swing trading course. I just added that to my original trading school, and it was just released just really over the last few days. And I thought, let's go ahead and get into the agenda. So I just want to talk about this very briefly. So it's swing trading and using compression-based swing trading. So what we're trying to find is a period where the market shows signs of compression or gets really quiet, and then we're looking to play an expansion move. And so I'm going to talk about an example of that, and I'm also the importance of making sure it's a part of a setup. Right? We want to make sure that we have other criteria that's telling us that this could play. And then the other thing I like to do in this strategy is to use a smaller time frame to confirm. Now, this strategy can be used on both the weekly and the daily chart, and use the smaller time frames with those. But I'm just going to view a daily example today. So let's go ahead and get into this lesson now. Okay, so I have the XLB up, the exchange traded fund for the sector for the materials. And I wanted to use this specifically because I wanted to show that typically I'm going to be looking at stocks that are active stocks that have shown signs of compression, but you can do this in any market. And the reason why I think it can be powerful is that no matter what type of market you're looking at, as long as it moves to some degree, and obviously these XLs definitely have some movement to them, what we're going to try and do is combine the daily time frame with the weekly, with the hourly time frame. We don't have to worry about the weekly as much because the goal here is to get in and get out. We're trying to enter at the end of compression, and as soon as we get expansion, we're going to be exiting. Now, I'm not going to give you I don't have enough time, obviously, for a small lesson to give you all the details of what I'm teaching here, but I think it's kind of interesting. Your classic swing trading is kind of like looking for a several bar rally, and then the moment you take out a swing low, you want to get short and play that, and maybe you could use a 2-bar high and trail that down. That would be here, and then you'd have finally gotten stopped out here. I mean, it would have been a nice trade. And so it's almost like you use a 2-bar low for the entry, and then you'd have a 2-bar high here. You keep trailing based on a 2-bar high, and then you eventually get stopped out, right? So, I mean, I'm not... obviously, I think there's a lot of guys out there who have taught swing trading, and I'm just using a basic, simple way of looking at it. Because I like to use 2 time frames, and because I spend so much time looking at triggers, and that comes from the Foundations course, I go into a lot of detail on that. What I'm willing to do is see a move to the downside here and then a pause in the trend. You see this tiny little bar? This is a very small bar. And if you look at it relative to the past bars, this is one of the smallest bars going back, basically back to this level. And even that tiny little bar is bigger than this bar. So what I want to do is take advantage of this tiny bar and say, we've got some selling showing up. I want to take advantage if there's continuation to the downside. And what I'd like to be able to do is enter and exit in a hurry. And in fact, in this situation, because this bar is so tiny, I can enter and exit before I even get to here and make a nice, tidy profit in a short period of time. So that's kind of the goal here. And I want to show that, yeah, there are times when you get it right off the peak, but then there are other times where you get a second entry opportunity where price starts to move in this direction, then quiets down. Now, why would I be looking at this specific bar other than the fact that it's a tiny bar? Well, we want to go back to our overall pattern and say, okay, look at what's really taking place. We had an uptrend, we broke that, we got the 1, right? We rallied back up, we got the 2, and now we've created the 2. Like the 2 is the test here, but we don't know where it's really a 2. I mean, we could keep going and then a 2 never really forms. When the 2 forms, that's when this drop takes place and we actually get like a pivot high in place, right? So I know I've got the one, which is the break of the trend line, and now I've gone up and I have a test. I have an official test in place. And then what follows after we form that is this little pause. Notice we're back below the 18. Notice how the 4, which 4 will play a bigger role in swing trades now. And I talk about that in the course. And so we got this pause, and then we're looking for signs on this time frame that are going to confirm that we're getting ready to really get going. Because what I don't want to have happen is have this tiny little bar and get whipped around, because it's a small bar. There's going to be a lot of movement, and sometimes there's movement in the opposite direction. So I discussed that as well. And so you can see how what took place here is we closed here, we opened basically at the same price, and then it actually went up and took out the high of this bar. Now, a lot of people would take that trade to the long side, but I'm going to show you why that is not the trade to take. What we want to do is let that happen and then wait for this low to be taken out. And if you look at what happened on the hourly, we basically paused here and we formed a beautiful pinch play. Look at how red was starting to kick in again to the downside. Look at the failure right at the 18 and the 40. Beautiful signal here that you could have taken really minimal loss, minimal risk, or I recommend waiting for this low to be taken out at 81. That's here, and knowing that we already have a trigger on this time frame, and you're really entering this stock with just $1 risk. So in a nutshell, that's basically what I'm trying to teach. There's just multiple factors that are taken into account. There are multiple things that can take place at the open. So you have to be aware of that and what to be on the lookout for. But basic premise being, if we look at compression and where it takes place in the direction of the trend and the overall pattern, we can take advantage of this situation in a short and quick and fast way, as opposed to trying to look for a big play. And the reason why I wanted to bring this up is that we're in an environment where it's hard to look for big plays. You kind of want to be trying to shake and move right now, just because the trends aren't lasting that long. All right, so let's go ahead and move into the symbols that came through now. Just briefly, my services can be found at rabilstockresearch.com. If you go to the services page, you'll find the individual package. Also, the trading course, and really the trading school, now that I've added a new course, is on there as well. So if you have an interest, go ahead and take a look. Okay, let's go ahead and get into the symbols now. Okay, so I've got my 5 charts up, starting with the Nasdaq Composite. 5 charts being monthly in the bottom left, weekly in the bottom right, daily in the upper right. In the middle, in the up top, is the hourly, and then up on the left I've got a zigzag chart of the weekly with the relative strength and the RSI, overbought, oversold, both the 20 and the 5 RSI. All right, so got basically everything that I look at in a stock all on one screen. And when I get calls from institutional clients, my clients that want that I do consulting work for, this is basically the framework that I'm looking at. If someone calls in and says, hey, take a look at this stock, I will type in the symbol and all this information comes up at once, and I can get a really good feel for what is going on. And some clients are a little bit more short term than others. And especially when I'm looking at the longer term picture, which I do for most of my clients, I start with the monthly and the weekly, and then I'll refer to these to help with the timing. So that's the reason why I like having this set up this way. This is the only platform that I can find that has this setup that I can do it this way. I like the bigger charts at the bottom being the monthly and the weekly, and then the 3 charts up top. I just haven't come across another platform that's allowed me to set up this way. So very attractive, very happy about this. All right, so let's look at this Nasdaq Composite. And again, let's start with the wide angle lens monthly, and then we'll work our way down. And I want to show you a specific trade setup that you could have been looking for recently. I know the Nasdaq Composite isn't actually something you trade, but the same play essentially took place in the QQQ. So let's look at this. We've got this 18-month that's rolled over starting early 2022 and has been declining. So, that's basically how I define a bear market, right? I mean, these aren't really bear market drops. They don't cause the 18-month to actually roll over like we had here. I know this qualified from high to low as a bear market, But when you don't even really, you barely close below the 18-month here, and then the next month you're right back above, that's just not the time for me to get people uncomfortable. And so I think part of a bear market is some kind of a time consequence. And so that's why I look at it this way. But the 18-month really helps define when a trend in a specific time frame has turned down. So look at what we've done, though. We've worked our way back to this line. And so we're at a very critical point here, around this 12,000, 1250. I mean, we have to evaluate what's going to take place here. And if you notice what's going on the weekly chart, we did break the downtrend line. Okay, and then so that's the one in a change in trend, and then we came back and we tested the low area, which was about a 50% retracement. That definitely qualifies as a test. So that's a 1 in a change in trend, the 2, and then the 3, which completes that, would be taking out this high. Do you notice how we worked our way back up to that level, but we never actually broke it? Now, I'm not saying we're going to or we're not going to. I mean, it's possible we're going to work our way through that, and then you got to start looking at the next kind of key resistance areas for this target move. Now, the problem I've got with this isn't really that the potential for it to break. What's missing is this component here. I know the MACD has moved up through the 0 line, and that is a positive. I mean, you can see it broke down through here and stayed below the 0 line through this whole period, and now that's reversing. But what the ADX tells me is the strength behind it, the power behind the buyers. And right now, we just don't have that right now. It really, at a minimum, if we go through and get up to this 12.5 area and we're breaking out, I really want to see this green DI at least take out this prior peak. You see what I mean? This is making a lower high right now. And in fact, let's just look at this. We made a double top here, and look at how much lower, how much weaker the buyers are in this situation. Now, the good news is that sellers are weak too. The red line is weaker than the buyers. But if we're going to expect strong movement, we need buying power. If we're going to make it up to 13.5, we're going to get back up to 14 or something like that. This line is going to need to improve to confirm that. Okay, so let's just look at what's taken place on the shorter term time frame real quick. We moved up, made a move up and tested this peak here, and that was this prior high. So as we moved up the second time, and we kind of creeped our way up, notice how the MACD did not confirm at all. It made a lower high, and in fact, while this was climbing up, the MACD was actually dropping down below its signal line at the same time. Look at how the ADX died out, and green DI made a pretty strong move on this leg, but by the second leg, the green DI couldn't even get above 25, and the ADX was actually pretty weak. So when I look at that, I'm thinking I have divergence in place on this, even though this is a double top. This is lower and not confirming, and this is very weak. So when I see divergence on this time frame, I could go down to the lower time frame and look to play a short-term trade to the downside. And if you see what happened here, we broke the trend line, number 1. 2 is the test, right? And then 3 is coming back down through this area. And then we had a pinch play here and a pinch play here. I actually like this one better because at that point we were below the 18-day. So you could have played that for a trade to the downside, either down to the 40 or if you wanted to play for a bigger move down to the 18-week. So anyway, I thought I'd just bring that up, how to use 2 time frames together. I do think that can be helpful, but we're at a really critical point here, 12,000 key level. But we're going to have to watch the momentum characteristics both on the daily and the weekly if we can expect something important to develop here. All right, so let's look at IHI. This was requested, the ETF for the medical devices. Showing some signs of life. One thing I want to point out is look at how the MACD, which was incredibly overbought at the start of the bear market, right as we were turning down in 2022, it was way above the 0 line. And then we've spent all this time, and now it caught up with the 0 line here, and it's been walking along it. And during that process, we've gotten really good support off this 50 level, and we've moved up, and we're trying to get through that 18-month line. So there's important developments on this time frame as well, on this trade on the weekly. So we broke the trend line, we tested, but this is actually taken out that high. Now, because we took it out from an overbought condition, we were up 1, 2, 3, 4, 5, 6 weeks in a row on the breakout of the 3, you'd expect some kind of a pullback. If this can pause in an orderly fashion and hold the 18-week, I think this could look pretty attractive. Notice the ADX on this daily time frame, pretty strong, right? Now, we're coming in kind of steep here. I don't know that this is going to hold the first try. It might have to consolidate a little bit and let the weekly pull in a little bit more. But as I'm saying, I think the pattern here is showing some pretty nice improvement. We're showing nice support on the MACD on the monthly, and we're trying to get through this 18 months. So this is sort of encouraging what's going on here. I don't want to see a violent break of 55, but we could drift back down below that a little bit. Okay, let's look at Berkshire. Really a pretty nice pattern here. On the monthly chart, we got above the 18-month on the move back up, and we held it during this phase right around the 300 mark, continued to hold support. Now, this is when the financials were getting hit pretty good. I mean, this has held up incredibly well relative to most financial stocks. So from that, it's sort of an encouraging sign. On a weekly basis, we had a low ADX condition, and we're trying to break out here. So this broke out above this peak. But again, it's relevant to me. Are you breaking out from an overbought condition? Well, we're up 1, 2, 3, 4, 5 weeks. We break out. Do I want to buy that? I mean, probably want to look for some kind of a pause or a pullback, even if it happens on a daily chart, which it's doing now. Let it do that and form a pivot somewhere around this breakout area. Maybe it comes in a little bit more, but if we can form a pivot here, that would be a little bit more attractive to me. I'd love to see it form on the weekly, couple week pullback and maybe form a pinch. That one would be pretty interesting from that standpoint. Definitely one to watch. I like the relative performance here. Okay, ANET. So this was one that just blew it out. Strong stock. Never broke down during a bear market. Bear market decline. The technology stocks overall got obliterated to the downside. This one never broke down. You always want to be on the lookout for the stocks that didn't break down, right, relative to their sector. Now the sector is trying to show signs of life again, and this one is showing, is still remaining very, very strong. Now on a relative basis, it's paused a little bit and pulled back as it's formed this ABC pullback on the weekly chart. But the condition in place on the weekly is showing really strong ADX condition and a lot of support around 150. The daily chart has now formed this consolidation pattern, and the 18 is almost crossing back below the 40. The MACD has worked off the overbought condition. It's come back down to the zero line. We have a low ADX condition showing the sellers are not very strong. Buyers were very strong here. Look at the ADX reading on this side. And then on the decline phase, it was very weak. So I'm really interested in this. I'd probably, if I'm looking at this one, I want to draw in my trend line here. And as long as we don't get steep overrun on this MACD here, I think you can take the trend line break as an entry point for this stock. Something to definitely be on the lookout for. All right, Dell is turning the corner here. We're getting back above the 18 and the 40 week again after not going to a new low. So you see how we had a declining moving average here and we were making lower lows, and then we moved up almost in the form, it wasn't really a spike and ledge, but it was kind of a climatic low because we drove off that bottom, and now we're forming this sideways pattern, which is basically like a ledge formation, right? We have this kind of sideways move after a spike low. So I'm looking for a little bit more confirmation on a break back up. You see how this tried to break, and this is why I've been telling my subscribers, what we want to do is wait for the higher low after the breakout. Another breakout from an overbought condition doesn't follow through. It's going to pull back. Now we look for the second mouse entry, right? The first mouse gets caught in the trap. We let it come back down, and then the second mouse is the one who actually gets the cheese. All right, that's the play we want to be looking for in some of these stocks that are breaking out from an overbought condition. Let that happen. Let it pull back. Let it hold and turn back up. Okay, CME. I don't really like the looks of this, frankly. I don't like the monthly pattern. We had a strong move to the downside, and now we're rallying back to declining 18-month. But look at this. You know how some of these others were holding the zero line on the MACD? This is actually broken. This looks more like a rally in a downtrend. While the sellers are not that strong here, we could easily get a retest of this low based on this overall pattern, based on the MACD. So I don't like the failure at the 18-month and the 40-month. I don't like the fact that on the weekly chart, we moved up, pulled back, moved up, pulled back, moved up, and now have pulled back. And all we've done is got the MACD, which was oversold, back to the zero line. Look at how weak the strength of the move is. So this is the opposite. Look at how the red has been really strong. And then during the rally, we have no strength in the rally. So I don't really like the looks of this pattern. I think it could muddle around here. I mean, maybe 175 is going to end up being support. And it's not like it's got a huge amount of downside risk to it. But it's not one that I would consider to be attractive as a buy candidate right now. I think it's going to need more time. Aspen Technology. So I know the person that brought this up, well, maybe they knew earnings was coming, but the reality is that what I've been telling my subscribers, if you're T minus 10 days and you're looking to do some kind of a swing trade or shorter term trade, just avoid the earnings. This is exactly what happens. And this actually had a pretty good overall pattern. Let's just evaluate going into this. We had a nice pullback after a strong move to the upside, good confirming evidence here. During the decline phase, we have no evidence of selling. We had a little bit of overrun, so we want to let this move up and to really play the first pullback. And if you notice, the first pullback is this gap down. It just wasn't, to me, it wouldn't have been set up. We would have been looking for this pullback to make a higher low, maybe set up on the hourly chart. We never got that. But the reality is that if you've got earnings coming, I mean, you can see that no one knew going into this. There's no signs of distribution. There was no signs that this stock, that people are recognizing that there's a problem coming with earnings or anything like that. I mean, the footprints of money were not showing any signs of real distribution here. So that's why you have to be careful. Things have changed in the last 10 years. People have no idea. Everybody's in the same boat, that no one has any idea about earnings. You have to be incredibly careful when it comes to earnings time. Okay, so let's look at this Capital Power. Pretty good overall pattern. We have a reverse divergence developing here. Do you see how this is making a higher low and this is actually making a lower low? So even though this MACD looks like it's rolling over, it's not really a problem yet. Where there is a bit of a problem is that on this decline on the weekly chart, we have massive overrun of the zero line, huge overrun. So what that tells me is that I need to give this time to turn things around. I need it it might be time just working sideways, or it might need to be a stronger move and then a higher low to develop. But I'm not just looking for this the moment it starts to turn back up. I'm going to look for a little bit more structural improvement in this time frame before I'm going to have a huge interest in it. Now, if you're looking at this as a utility, and I haven't looked at the information on this, it's possible this has a huge dividend. If that's the case, you want to look for a little bit early entry, then use the daily chart. But I'd still want to see this get back and make a higher high here, and then maybe buy the pullback or something like that. Okay, let's look at ROK. So we had this move to the downside and then a move to the upside. And what I say over and over again, let's look at this in a little bit more detail. Do you see when this crossed above the 18-month, it was declining? And this goes for every time frame, any time frame. If you get a rally above and through a 18-month or any 18 that's declining, you look for a retest, and that's what's taking place now. The problem is that the way this is coming in, it's actually breaking the 18-day. I think this is going to take more time. It's going to need more time to really be ready to get going. But I still think this is in the game. I mean, if this can cup around here, hold the 270, 265 area and cut back around, it could look a little bit more attractive maybe in another month or two. AT&T still has a declining 18-month. We cannot get through. Every time it tries to climb through it, it gets back below. It hasn't been able to stabilize here. I think this is going to need to get above 20 now to really turn things around. Don't go to a new low, make a higher low, and then get back through 20. And then I think this could look a little bit more interesting. Let's look at ISRG. So look at what's taken place on the monthly. We failed at the 18-month, but we didn't go to a new low. Do you see how we had this big green bar here and we basically held the midpoint of that big bar? So that's really the first really good sign. Now we're crossing this 18-month, but what's going on is it's declining. And we've got all this resistance. Look at how harsh this decline was right here. So I think what's going to take place here is, yes, this is improvement on this time frame. A lot of dynamics behind this time frame. I think that we're going to move up into this region where there's a little bit more resistance. We got a little bit more upside. We probably pull back and go again, and we get into this resistance up here on the monthly chart, and then we go through a little bit of a consolidation. Because this line is declining, we should only treat this as a trading move for now until we get a better pullback and this 18 months starts to cup around. So you can play it. You just have to be a little bit more nimble right now. Thanks for watching the show. If you have any stock requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.